Hi, everybody. It's Erik Peterson, Proven Business Advisors and Proven Realty. And we are here today with a really good friend of mine and special guest, Ben Brickweg. He is out of the great state of Colorado. And we're talking today about how to maximize the valuation, not only of your business now, but also in the future. But before we dive in and learn some tips and tricks that you can implement into your business right away to increase the value that you have, find a really good structure in your business and just really plan accordingly. What I would love to do is just have you guys hear Ben's background and his story. It's pretty phenomenal, and we're lucky to have him here. And then we'll be giving you details about him coming to Williston next week. We're going to be meeting with companies just like yours in the Bakken. We're doing an event, live event, next Thursday night. That's going to be May 7th. Details to come. It's going to be over at the Williston Area Rec Center and will be really fun. So hopefully you can make it. It's going to be hands-on, low-key, and really just a great way to learn more about business valuations and how to increase your value. So anyway, Ben, how are you doing today?
Hey, I'm glad to be here. Excited to pour in a little bit. I think there's a lot of rumors and BS and things that are going on when people talk about selling a business. I'm going to touch on probably 7 of them today, depending on how time goes. But I'm thrilled to be here.
Well, yeah, thank you. And for those of you that don't know me and my story, I was a financial advisor back in Missoula, Montana, prior to the boom going crazy. Managed about 700 individual financial accounts. I did 401ks and all that stuff. Well, 2010, my best friend went bankrupt. So I bought a semi truck with him to try to feed his family. Next thing you know, we had about 30 semi trucks. We ended up buying 4 different businesses in the Bakken, and we were doing about 600,000 in revenue in just a few short months. Well, everything was going crazy, and obviously all you needed to do at that time was fog a mirror and you can make a bunch of money. But it wasn't until I started talking to these businesses about their growing pains and how they can increase the revenue, and we started consulting and strategizing with them, did I realize that that was really my favorite thing to do. I love the financial advising. I love connecting with people and strategizing. But through it all, there's nothing, Ben, as you know, like talking to a client or a prospect and looking at their business and saying, hey, if you just tweak these things, you'll increase your value immediately. And I think that process has been fun. I met you, about a dozen years ago by now?
Oh man, yeah, lucky us. It's been a whole dozen.
Yeah, you used to have hair then, by the way. But yeah, we were running around back in the day in the Bakken, meeting with businesses that wanted to increase their value and sell. We had a lot of businesses under contract. Things were going really well. And at that point, the Bakken was one of the few bright spots in America, wasn't it? Economically, right? Like we're just coming out of the 2008 to 2010 recession. And so a lot of these really good businesses just needed some help and hand-holding on how to value. And we had a lot of really good success. Tell us a little bit about how you got into that and then how things have progressed and where you are today, because it seems so long ago.
Well, I'm gonna disappoint you and not answer your question directly, because I think the foundation of this matters more. Is I didn't take some online class. I didn't see an ad on Instagram that said, bro, you can be a business broker and look how much commission you can make. I started in this, it's 27 years ago now when I did the math, which is tough because I still identify as being 26 years old and a full head of hair and tall and good looking, but I play the hand I was dealt. But, back when I was still in high school, we had a family business that was set for an 8-figure exit, and it didn't happen. And I guess that's what kicked off this series of events, which makes you all stuck with me to be here and be a smart ass and talk about things. But I wasn't supposed to ever work. We had everything set up and it didn't happen. And it lit a little fuse under my ass to get me to come out here. And as you can tell, right, I'm not a stuffy, formal and fancy guy. I don't show up on a tie. Usually when we're on location with a client, like I'm in Wranglers and boots and show up in the truck. And I think I'm really driven to help my people. And that's what we're here for, because the reality is, dude, 80% of people that try to go sell their business will fail. So that leaves 20% that will actually sell the company. And of that 20, only a tiny little fraction of those, 20% of the 20, 4% actually sell on a deal that they don't regret later. So I'm super passionate about coming in and shooting you all straight, telling you what I've seen. I mean, 27 years ago, we lost that deal. I've been actively involved in helping people sell companies for 20 years now. I one day had a lawyer come in and screw up a deal for us and still had the guts to send this giant invoice to somebody who didn't even get to buy a company. And I got so pissed off about it, I went to law school. So I became a lawyer because I hate lawyers. I'm also a FINRA registered rep. I have a securities license. We're licensed business brokers. And, there's a lot of guys running around on the internet talking, oh, you don't need a broker. You don't even need a license to sell a business. But what they don't say is they've got an 80% chance of failing you. And you don't know that as a consumer, as a business owner. You've busted your ass for years, decades, building this business that makes money for you and your family. You've had a nice lifestyle. And, I'll talk about this. I actually have some slides later, but it's not like selling a piece of equipment when you sell your company. If you screw it up, you don't get anything. And
Right.
the brokers aren't quick to tell you, the chat room buddies aren't quick to tell you that. The people you talk to at your country club or your shooting range, depending on how you're wired, I think you know how I'm wired, but the people you talk to there don't tell you the whole truth. And that's what I'm here to do. So if nothing else, I want anybody that's either watching this or comes to our next event in Williston or any of the series we're going to do, or even if we sit down one-on-one in a kind of a discovery call to just kind of tell you what we see, we're not going to do the high pressure sales pitch thing. We're just going to sit down and get you the right information so you can decide what's next. And I can rant on that forever. I'll stop.
No, I think that was a great foundation. So thanks for laying it out. I know you're one of the most humble guys that I know, but at the same time, you have a witty confidence about you that bleeds arrogance. But that's honestly what I love the most about you. But I would say at the end of the day, anybody looking to get some help and some consulting needs to really do a deep dive and find out who's actually representing them behind the scenes. What qualifications do they have? What experience do they have? And you're a pretty humble guy. I mean, going out and getting a law degree and then you have an MBA, right? So we both share that, getting a securities license and doing all the right things structurally to set up a good foundation. And then not only that, surrounding yourself with people that are smarter than you and things that you're not. Like you've built an amazing team of highly talented individuals. And at the end of the day, we're a results business, right? Just like in real estate, we sold somewhere around 1,600 residential and commercial and industrial transactions over at Proven, and take a lot of pride in that because that's a lot of families and businesses that we've helped. But your numbers are even more insane. You have helped over 3,000 individual businesses in some capacity, whether it was legal, selling them and advising them, and successfully got 300 of those businesses across the finish line in a market that only 20% of them actually succeed. So talk a little bit about that and your track record, because I think that's really important for people to hear.
And let's clarify that, right? So for us math people, that the way you said that, like, oh, it's not that I sold 10% of the clients I've helped. It's a bigger net, right? So whether it's, from helping people start businesses who are still running successful, many multi-million dollar in revenue companies to those that have had to shut down and we couldn't even try to sell it. But yeah, the idea is the way I look at it, I've touched 3,000 lives. I've helped 3,000 families and business owners really understand how to build something. And in many of those, man, we're just waiting. We're excited because we've been able to help them sometimes a decade or more before the exit comes so that they're ready. Like my clients sit out there now, whether it's through Sagewood or some of my other companies, they've built something that they know is sellable, or the term we use is exit worthy. They built something that's worthy of an exit when that day comes. So they're ready. And yeah, of those, of all the engagements we've taken on, every deal, whether on the buyer side or seller side, whether through my law firm or through Sagewood, yeah, we're up to almost 300 closings now, which is
300,
which is fantastic.
Yep. And so, talk about that. What makes you different with your team from other people that are out there, right? Just like in real estate, we know a lot of brokers that like to take on listings just to take them on and they never actually get them across the finish line. What I've really appreciated about collaborating with you, shoot, for the last 15 years is you don't need to do these deals and you would much rather tell somebody no, right? Hey, now is not the right time to sell. We're not the right ones for you. There's too much of a delta from what your business is actually worth to what you want out of it. You're not really a good seller. Explain to everybody what that nuances is, because as most of the people that we've sat down and talked to, there's a pretty big gap on what they need and what they'd want to sell for. But what makes your team so much difference of actually turning the success and make it a reality?
I mean, as much as I want to go on and talk about that for an hour or two, which I can,
Sure.
we'll give the short version. And you can see some of this. One of my brands, one of my companies is called Exit Worthy, and we've got a YouTube channel where I start talking through the manifesto and why we do what we do. But I think if I have to answer this in a concise way, it's like, look, I know the statistics. Our family got punched square in the teeth with the statistics. And my mission is to go out and help people understand. I actually have this thing we've started lately. It's this initiative called the Million Owner Mission, where we're going to go out and continue helping families and business owners until we help 1 million families understand what goes into building an exit and business value, so that they don't waste years and decades of their lives building this company that they just assume they can sell someday and then just watch it close. So I mean, really what we do, we just take a measured and controlled process to this. I mean, I'm going to make a shot at real estate agents. I'm sorry. I still love you. But selling a business is nothing like selling a piece of real estate. And real estate agents shouldn't do it unless, of course, there is a fantastic collaboration where we work together. But it's a different skill set. You can't just put your business on the market and put a sign in front of it for lots of reasons. So let's do another one of these, and let's just sit down and talk about process one of these days. But
Sure.
we take people through a measured process. We don't play the game of high-priced consultants or lawyers where give me a retainer and we charge a big hourly rate and we just burn and burn through this and have you keep replenishing and paying money with no results. But on the other side, we don't do the thing of, everything's got a price. Yeah, cool. We'll try to sell it. We'll just put it on the market and
Right.
don't even worry. Only pay us when it closes. I've been doing this long enough that I've created a hybrid approach where we can not only go in and follow a process, get much better results. Our success fee at closing, other people would call it a commission. We call it a success fee because it aligns with how we work and help. Is a lot of times 30, 40% less than somebody else, because we ask you as the owner to invest along the way. And we charge money up front to do an assessment of the business. And that it irks some people. But the reality is it gives my team permission, like you were saying before, it gives my team permission to tell a bad buyer to go away. It gives my team permission to tell you straight up that, you think your company's worth $10 million because that's what your buddy sold his for. And I say, no, sorry, dude, it's worth $2.5 million. And you've already had it sitting on business for sale websites in a non-confidential manner. You've already burned the market. We can afford to tell you how to fix that instead of just bullshitting you and telling you we'll put it on the market and see what happens.
Yep.
I said it was going to be short, but that was long.
No, I love it. I think that it's really important to kind of lay out expectations and come up with a game plan. Additionally, what I appreciate about you and your team is that you guys always say, hey, now is not the right time, or we're not a good fit. And you turn down more business listings than you take on, which I think is really rare. And it's not going to change your life if these businesses sell, but it will change their life if they do it the right way in the right process. And having skin in the game on both sides makes it more of a collaboration, or makes it a collaboration, and then gets everybody's expectations to align. So tell us a little bit about what that process is of working with you and your team, from a, hey, just met you, they're just kicking the tires on you, to helping them get it to the finish line. What does that process look like in your world versus everyone's else? Because it's obviously been so successful.
I'm going to answer that. Then we're going to look at the slides for today.
Perfect. Sounds great.
Yeah, I mean, process starts with the conversation, and part of part of us talking and bantering like this at the beginning is I want everybody out there to understand how we work and what we do, how we're wired. Because if we end up working together to sell your company, we're going to talk, and we're going to talk a lot, and we've got to like each other, or at least be able to tolerate each other with a smile. Because we're not always giving you the easy answers, but we've got to shoot you straight. So we start with a conversation. We move into what we call an assessment, where we actually look at your business and your financials and some of the things behind the financials, the things that don't show up on a tax return or a P&L, to really give you an idea of what we think your company is worth, what it could be worth, and how to bridge that gap. From there, we go in. We don't have time today to talk about the detailed process, but I'll just say I've worked on some of the most complicated Wall Street type deals, brought some of that process, but made it accessible to people on Main Street that own real businesses that do real things. People who are, dirty hands, dirty boots, and actually go out and give a shit and make a difference for their community. Those are the people we want to help, not those Wall Streeters. But I know how to protect you from them. I know how to stop most of their shenanigans and really help you find the exit that you need. And I built that all into a process. I've trained a killer team on this. I'm overseeing every single project we work on. And yeah, we're excited to help more folks in your circle up in the patch. I mean, I remember when I first got out of law school, I don't know if, this is how we met, right?
Yep.
I'm up helping people do deals up there, and I'm excited to be able to expand what we do into there, especially with your help and your team's help.
Yeah, I appreciate that. And we spent 16 years now on the ground talking to businesses. And it seems like in the Bakken, every time we get a 2, 3, or 4 year run and business valuations are good and we have good tax records, then oil crashes or COVID hits or oil prices slow down again. And so right now, is there a better place to invest in right now than in North Dakota in the world? Like, I don't believe it, right? We're having global slowdown and we have a lot of economic problems in a lot of these other areas. As I travel around the country to all these masterminds and investment seminars, they're a lot slower than we are. We have high wage growth, low tax rate, oil prices are strong, and a lot of these really good, solid companies just like yours are doing really well. So now is the time, if you're thinking about an exit, while we still have wind at our sails and we have some momentum, to start looking at the business valuation. I think that's really important to know. And as investors, hedge funds, family offices, where else are you going to put your market or your money if all of a sudden you have to invest in the stock market, which somehow is at an all-time high? We know the volatility of crypto and the global markets, not a lot of good safe havens right now, especially with high interest rates and a weaker economy, than in businesses. So investors are flooding to these areas like ours, and a lot of these PE shops are offering crazy numbers for our local area businesses. So yeah, why don't you hit the slides? Show us.
Well, hold on.
Okay.
I got to jump in on that one.
Okay.
The PE, and we'll do a whole, I call these, and you've actually been in the room when I've presented on this, but I call it the 4 horsemen of your exit apocalypse.
Yep.
The PE groups are one of them. They're going to talk a big game, just like a frat boy at closing time talks a big game, right? They talk about this big giant multiple and all the money they're going to pay, but when you peel back the layers, there's a lot of bullshit that comes with those offers too. But yeah, beware of the phantom multiple, we'll say.
All right, sounds good. The stage is yours.
All right, let's. All right, we have the screen?
Yes, sir, we do. It looks great.
If you're in the chat, let me know.
Yeah, thank you for everybody hopping on. The chat is filling up here, and looks like we got a lot of people on, and we'll be sending out this recording for you to go back and look at in case you missed anything. And you also get a link to next Thursday's event. We want to keep it really informal and smaller and more intimate, so make sure to get registered right away.
All right, let's jump in here. So what what we see all the time is owners expect that selling a business is easy. I touched on this a little while ago, that it's just like selling a house. You put a sign up in the front yard, you go find a buyer, you get paid, that there's an automatic market for it. And it really isn't the case. I've talked before, 80% of businesses that try to sell just won't sell. And they fail to sell for lots of reasons. They fall apart in due diligence. There's value that's leaked out over the years when you've built things and done things the way you've always done it. And really, the biggest issue is that owners wait way too long. They wait until it's time to transact and say, well, I'll just call a broker. Like, whatever, it doesn't matter. I'll call somebody, they'll slap it on the market and we'll sell it. But it's really not how it works. So we talked background a little bit, but I've always got to do the thing here. I'm not here even as the sales guy, the lawyer guy, the securities guy. I'm here because, as we talked about, my family's 8-figure exit fell apart. I thought I got to be a cool trust fund kid and go hunting and fishing and fly around on a private jet my whole life. I screwed off in high school thinking that was going to happen, and I've had to claw my way back since. And I want to help more of you. The joke is I want to help more of you wreck your kids by making a pile of money and letting them have the freedom to do what they want and start their businesses. But I shared, I'm a lawyer who, the slide says, hates how deals get overcomplicated. I'm a lawyer that hates lawyers. I hate how they act. And I'm sure some of them are either on here or will come to our event or we'll go have conversations. But look, lawyers get paid to cause chaos and then fix it and charge you a lot of money to do it. I think they have a fantastic role in your deal, but yeah, I am one, so I can say I don't like them. And I suppose I should say here, I am a lawyer, but none of this is legal advice. Let's do this disclaimer thing too, right? I'm a registered rep with FINRA, but I'm not your registered rep. I'm talking to you in theory about generalities, but I want you to get this right on your exit, and I want to help you avoid what we went through. And my team made this for me today because I tell this example regularly. Selling your business isn't like trading in your truck. It's not that you say, look, I'm not going to detail, clean, wash the truck. I'm just going to go get a new one. I'll bring the dirty one in. Maybe I'll lose 10 or 20% on the trade-in value, but I don't really have to do anything. It's just not like that. If you screw up your business sale, it doesn't sell. Things get auctioned off. And some of you owners, especially in the Bakken, I mean, you got a lot of money in iron. I guess you can always auction that off at the end, but that's a small fragment of what your business value actually really should be. Does that make sense? Let me know in the chat.
Yeah, it looks great. Anybody else, just throw your comments in the chat as well. Thank you.
So some notes about Williston and why, some of the Main Street or big city issues don't really apply, or we have a different set of rules or a different lens we look through. But like it or not, even if you're in a yoga studio or an ice cream store, everything in your business ties back to the oil field. And we always have to stay aware of that, right? Because these, as you're mentioning, the markets move. We're in a cyclical environment. Buyers a lot of times are sharks. You're getting not only private equity, but strategic buyers in other segments of the oil services space and the industrials. And right now, grit heavy businesses are attracting serious buyers. And if you end up out on the internet and seeing social media videos, all of a sudden buyers are the new thing. There's people offering solutions to buyers to help. It reminds me, Erik, you run into this, right? Of the people that buy distressed rehab, fix and flip houses.
Yep.
There's a whole world of guys out there teaching buyers, and not just individual buyers, but business owner buyers, how to come out and be predatory and position yourself like a private equity group, but to really come in knowing that they want to pull a fast one on the seller, get a business for no money down, all seller financing. And so I know it's off script of the slide, but we have serious buyers, we have wannabe buyers, and and they seem to attract to markets like Williston. So we need to be out there and making sure we protect you from these. And what we're going to talk today, and by the way, this is the AI generated, slimmer, better looking version of me telling stories, but I'm just going to talk to you guys about 7 of these patterns that I see show up over and over again. And because of time, we'll try to stay high level, but when I come up and we do an event, we'll dig in more to some of these. All right, can we all see this?
Yeah, looks great.
So this value killer number 1 is the owner bottleneck. And Eric, you ever run into anybody that does this?
All of them. I shouldn't say all of them. A lot of them.
Or do you do this in your businesses?
Of course I do. All you got to do is ask my team. Of course, I am the bottleneck on most things.
All right, Eric's team, don't say anything in the chat. We don't need to out him on this. But point is, it's okay. People do this. But when you own this business, most of you have gone out because you're really good at doing something. Some of us like me are just unemployable and wouldn't ever make it reporting to somebody else. But that combination of being good at something, having this entrepreneurial drive to be free and make money for your family and live a lifestyle that you probably didn't, and provide for your kids and donate to the community. You've gone out and done all this, but what you don't realize is you're still that bottleneck. You're making the key calls. Your business is solely dependent on whether you're available to be active in the business. And really, things don't move without you. The takeaway on owner bottleneck is really that buyers aren't paying for jobs. They don't want to come in and give you a healthy price for your business if they've got to come slog out 60 or 80 hours a week. But what they do pay for is systems. And so when we're doing this in person in a workshop, we would break here and really try to dig into this and help you solve it. But the question for you all today is just think through what happens if you leave. I mean, I run into so many business owners that haven't had a vacation in 7 years, 10 years. And then, it's great. You sit down with a couple and the husband's like, yeah, we do. I just took you to Mexico, babe. And she's like, you were on your damn phone the whole time. You couldn't leave it. So it doesn't count as a vacation if you're attached to your phone the whole time. But Yep. Can you do it? Can you, as the owner, leave for 30 days? And the answer most of the time is no.
Right.
And there's
several of our owners here, I'm looking down the list, that run EOS. So that would be one solution, right? Is have a good entrepreneurial system that helps you leverage and help you lay out systems and processes to make that happen. And if you're not on EOS, you should be. Our company is. And I can tell you that the clients that we have that use it have seen a huge increase in the amount of revenue and just less volatility that they have, and then more time away from your business and not spending time in your business, right? You can work on the business. So anyway.
Brother, we love EOS. Buyers love EOS.
Yep.
And you don't have to follow EOS like it's some sort of religion. There's all sorts of different ways and Yep. interpretations and versions, we'll say. And I'm even seeing in the market that, I think a lot of people stop with EOS because they don't know how to really make it stick. And then they talk to somebody who would be an implementer, right? Not an integrator that's in your business, but the implementer at market $50,000, $60,000, $80,000 to come in and have 4 quarterly meetings with you. I've actually seen an uptick in people who are being fractional integrators as opposed to implementers, right?
Yep.
So if you're not in the place to have a COO in-house, these are people who will come in and, for a reasonable investment, active in your business every week. So it's a little bit of a tangent, but I'm really glad you brought it up, man. Like, EOS is fantastic, and that's part of what allows you as an owner to take your 30-day break. So number 2 of 7 here is what we call financial fog. And let's just be honest. Most people listening here, most people I run into, particularly in the parts of America where I love working, are not fans of the government. And I'll leave it there for our recording and to not get on any more lists. But I will say it is very common to run your business and push through all sorts of expenses, right? From the the hunting trip, to that extra Raptor that you're running around, because man, that Raptor R is pretty with 729 horsepower, whatever that thing pushes out. It's not necessary to your business, but if you can write it off and pay less in tax, why not do it? But when we start to sell the business, we need to be able to look through and cut through that financial fog and really have the buyer understand what pile of cash would sit there if they buy it. And when you stop spending money on the things that the business doesn't really need. And it's where I see errors happen when good owners get stuck in things like free valuation calculators online, or the cold calling broker. Like, I'll tell you what your business is worth right now. Give me 3 years of tax returns. But they don't dig into it. That's where we get into this fog problem. And it's extra critical to be able to, and you see point 3 of numbers requiring explanation. When you're talking to a buyer, you need to be able to show them a very clear picture from the beginning and say, this is what the tax returns say. There's more money in here. Ideally, if we have a head start, we can help your tax preparer for at least a year, maybe more, file a tax return that feels more accurate to the actual cash flow of the business. But if not, we can go through a process called recasting, where we actually take time, and we take hours, many hours sometimes, to dig through your numbers with you and help understand what that means, so we can clear out this financial fog.
Awesome.
So here on our gut check on financial fog is, if you just had to print out your income statement, your P&L, and hand it to a buyer, what are the things you'd have to explain? What are the ones that don't make sense or are way too big? And really think through how you can be ready to tell the story, but better yet, how you can position those. Sometimes it's as simple as recategorizing the account in QuickBooks so it shows up in other expenses at the very bottom of the report. Little things like that we picked up along the way that have really helped tell a much clearer picture to a buyer. Next one, the customer cliff. How many times have you seen this, of businesses where 80% of their revenue comes from one source, one place?
Too many.
Or MSAs. People are really proud in the oil patch with their MSAs, and then, is it tied to your relationship? Is it tied to you hired a pretty gal to go out and bring coffee and donuts on location to go sweet talk somebody into an MSA? Are these exclusive MSAs, or at least limited, or does anybody get one? I've had owners brag to me about, I've got 127 different MSAs signed. How much business do you do with these folks? Well, none. But I've got the MSA, man. If somebody would only come in and buy. But even in other examples, right? You and I worked on a deal a decade ago where, on first glance, it looked like heavy reliance on one or two of these oil companies. But when we really started digging into it, we realized, yes, there's an MSA with the oil companies, but how many different rigs were actually being serviced? And the relationships were not just with the suits and back in a home office in Houston, right? These relationships were with each person on site at each rig. So we've dealt with that together. And the idea here is, you tell the story, you show the full picture that, the bean counter number dorks wouldn't see, right? You look at a spreadsheet and you see, there's huge customer concentration. Well, maybe it's true, but maybe it's not. So the whole idea here to avoid the customer cliff is making sure the buyer sees that it will continue without you. And here the question we ask is, what happens to your customers? If you leave, are they only hanging out because they love Erik and we refer business only because Erik? Or do they say, oh man, Erik's got a team. Like, we don't even care about Erik. We don't even have his phone number. We call all the agents and get things done. Similar approach here. Next, we call operational chaos. And I know, especially if we're in the EOS world, talking to people who are visionaries or big outgoing business owners, this is the kind of shit that drives you nuts. SOPs, process. No, I just tell people how to do it. And particularly here, as we see in the oil patch, dispatch and operational tasks need to be systemized. It needs to be in project management. It can't even live on a whiteboard anymore. And guys, surprise, surprise, it's 2026. Software is easy. You're going to have to deal with it. I will argue and fight with you all later offline about this, but there's no business that should be run like we see in the image we made.
Yep.
So the gut check question here, do you have a playbook that the buyer could follow the day after closing? Right? And this is important because, I joke, although it's not really a joke, about the evils of private equity. One of my favorite jokes, and you'll roll your eyes, Eric, because you hear me say this all the time, but sometimes selling to private equity is a felony.
Right.
Like, oh, what do you mean? No, because it comes with a 3 to 5 year sentence.
Yep.
They offer you a big vanity multiple. They give you half of it in cash and then some stock and then part tied to an employment agreement. And you end up working in your business. And there's some salty dogs on here like me. I know some of these names, but man, what do you do? You think you're selling your business for $20 million. You get 10, which is nice, but then you get another 5 in stock and then 5's tied to earnouts, and you show up the next day and you're reporting to some 23-year-old little shit that just graduated business school and his dad's the vice president of the company and he's on you about margins and all of this. Like, no way. So if you go through this and you build the playbook that doesn't require you to be there, all the SOPs are done and you can hand it, me, like I usually have a 3-ring binder for effect here and I slam it down and be like, well, there's the playbook. And you throw that on the closing table and leave, you've got a much better chance of realizing more of that cash at closing, but also not having to go work for somebody else.
Heck yeah. Hey, really quick question. Did you want to handle short questions as they come in? Chris, one of the best guys that I've met in finance in the market, one of the smartest brains out there, asked a really good question on this topic. Do you want to answer it now or at the end?
Yeah. Will you read it for me?
Yeah. So the Bakken play has consolidated significantly where a handful of companies control the market, the Devons, the Chevrons, the Phoenixes. It is sometimes difficult for service companies to consolidate their revenues with more than maybe 2 or 3 clients. How do you sell that to a potential buyer? So there's less players, consolidation, just like we're seeing actually in the real estate industry right now. How can you sell that lack of diversification to potential buyers? How do you get over that hurdle?
Honestly, sometimes you can't.
Right.
But if we've got time to plan for it, I would love to be in a spot where you don't just have the normal MSA. You've got a preferred MSA. You've got some sort of exclusivity, first shots, other sort of elements. Beyond that, I would love for you to not have 90% with one of these guys and then 5 and 5 with the other. Like, ideally, if you've got 3, they each have a third of your revenue stream. And again, sometimes you can't get around it.
Yep.
But you aren't going to get the same sort of terms and price and deal structure when you're stuck with 3. And so I would think there's ways to maybe acquire another business that is complementary, where you're not only stuck with these limited numbers. And I know it probably sounds way too simple and way too basic, but there's ways to figure that out. But if there's nothing you can do, the idea is to start positioning that as you being the leader in the company, in that industry, in the space. So you're the one they want to buy, because if you're doing the same service as 3 other companies, but you're bigger, you have better SOPs and operations, they'll come buy you and squish the other ones out.
Yep. Yeah. Great question. Really good answer. So thank you.
All right. Who's got a computer that looks like this? Have you
Yeah,
seen
it's
one
wild.
lately?
No, I have not seen one of those lately for sure, but there's plenty of them out there as I'm touring these owners and their companies.
Right. So again, it's 2026. So when I talk about tech negligence, usually at the base level, I'm saying something that I don't even put on this slide. But man, Google Google yourself. What does your website look like? It doesn't take that much to spin up a website that makes you look modern. That's the basic level. But here, where are you keeping all the projects? How are you keeping track of what's going on? Who needs to be where and when? Um, Compliance, licensing, these are all huge issues where you get jammed up because somebody loses a piece of paper. This all needs to be in phones and tablets and have you look like you actually built something in the last 10 years.
Yep.
You can't have this computer, you can't have that. Yeah, you just can't even have all of that mess. And again, it's not hard to do anymore. Some of the partners we work with uh, are able to create some really cool dashboards based sometimes on EOS principles, others just on general finance principles, so you can really understand. And when we get a buyer who's coming in and remember, a lot of times buyers are coming in trying to, they talk sweet at first and then they start retrading, cutting the price later. Tech is one of the biggest areas I see them do this. Is, well, I saw your numbers, but I need you to prove it. I need you to show me that they're quality and that they will continue. And we get into due diligence and we get boxes and boxes of paper and not a spreadsheet. So we've got partners we work with that can help on this. And I think it's, again, one of the most powerful things you can do. And we really only need 60 or 90 days before going to market to really clean up and build a command center for this. So
Yeah, not only that, and we've embraced technology, especially on the AI, to give us a better look and more real time on our numbers instead of having to wait for quarterlies or your month end. You as an owner, you want to be able to make those decisions in real time, have the fluidity because our market is so volatile, and be able to have access to everything really on your phone. And then that's going to be a lot easier for somebody to check in and see what your business is really worth and how they envision taking it over.
Yeah, and just the fact that the data looks good and it's clean and it's deliverable in a web portal now
Yep.
makes you look bigger, safer, more valuable, just a better risk overall. And so the gut check question, if you really thought about it and you look back, and would you trust your business based on what you can see online and access online in your data? Or, could your high schooler access the information on your business from their phone? It seems absurd, but it's like I got two high schoolers. Like, I have them check things all the time. Can you read this? Does this make sense? So that's that one. Key man dependency. We all know this. This is distinct from dependency on you as the owner and the bottleneck we talked about before. But here, it's great. You've taken the step and you've got team members that can run these things, and you can do that 30-day vacation that I talked about. But what happens? Are these just mini versions of you and mini owners, and now it's just delegated to 3 people that if they leave, the whole company's hosed?
Yep.
One of the top secret tricks we love to do here is, and the more I get to know you all, you'll see we like to do things our own way. But the traditional M&A model or business brokerage model is that brokers tell you not to tell your team about the sale until the day after closing. And I've been in those rooms where people have walked out. I'm like, what do you mean you're telling me I've got a new boss and you've been working on this for months and this is the first I hear of it? I take a different approach most of the time when we can do it, to really try to reward some of your key employees, your key managers and executives, and get them an incentive structure for sticking around. And I think most owners, they realize this and they're like, look, I've got this guy or that gal that they've been here 20 years and helped out. I want to do something nice for them. Sometimes they'll just give them a piece of the proceeds. I would tell you here, let's think through it and come up with a way to do a share of that sales price, but do it in a way that we encourage this person to stick around. And, I talked about that 3 to 5 year sentence earlier. If you can pass that 3 to 5 year sentence off on your key employees who aren't ready to retire and say, look, you're going to make $200,000, $2 million, depending on your scope and the size of the business you're selling, but you can pass some of that to your management team and say, look, all you got to do, stick around for 24 months after closing, help with this transition time. A lot of times you as the owner can get out of any post-closing obligations because you did what you were going to do anyways and give money to your team. You were just smart about how you wrote it up. Does that land?
Yeah, brilliant.
And so the gut check question here, just think through who are the other people that can tank the business if they leave. And then what can you do to keep them? Think of that scenario that I've been in too many times of, there's somebody super important. There's no way to tie them to the company, that there's no way to tell a buyer that they're going to stick around. And really, what can you do to keep them? And if you're going to give them some cash anyways, let's be smart about it and strategic about it and make sure that it helps you accomplish what you need to do. And here's the most unfortunate one. Usually we can't control this, but it's the one you need to be ready for. It's the one why I want to talk to any one of you business owners, even if you say, I'm not selling, I'm not ready for 10 years. I'm going to ride 3 more cycles. Great. But what doesn't ride 3 cycles? Fights with partners, the sometimes unavoidable breakups of marriages, sickness. All of these things can pop up. And if you're selling because you have to, you're in a much tougher spot. I hate it when clients call me and we talk about the business. And one of the questions I ask is, well, why are we talking? Like, what's going on? Why now? And they say something like this, like, I'm sick, I'm getting divorced. The judge said I have to. God forbid, sometimes it's the widow calling, like, yeah, my husband died at his desk, I don't know what to do. We lose all of our leverage. We go from being able to engineer an exit to, holy shit, hopefully somebody will buy this thing. And I can't stress it enough. It's thinking about your exit and coming up with an exit plan, even when you're not ready, is really just the estate plan. It's the will for your business, and nobody does it.
It's true.
And so the way to think through this is what causes chaos if you're gone tomorrow, if you can't, won't, or don't show up for work. It happens to guys that are starting to be our age. We're starting to be old farts, Eric. It happens. It happens to young people. And you really owe it to yourself, your business, your family to work through some of that. So those were my 7. I know how are we on time?
We've got about 10 minutes. I wanted to have a little bit of time for more questions. And then I want you to kind of tell them what people can expect next week when they show up to our event on Thursday. So any other thoughts on your end other than this slide?
So buyer's paper. Yeah, we'll get into that later. I got most of this. You don't get multiple shots to sell your business. You get one chance most of the time, and you'll probably only do it one time in your life. So let's make sure we're having the conversations early and often and making sure you're ready. And here, how it starts with us. We talked process earlier. You stole my thunder here, but let's have a phone call. Let's talk through what's going on. And I'd be very clear. We don't do free valuations. It's just a stand we've taken because we want to be able to give you the right advice. We want to take time to dig in. I mean, we spend many, many hours with people that are much nerdier than me looking through spreadsheets and your financials to really tell you what we think the company's worth, not what we think it would take to get you to sign with us. And you said it before, Eric, we turn more people away than we take. But when we turn away, most we're helping and saying, here's what to work on. Let's keep working through it. So we're here to support you on that. And yeah, we'll jump into questions. Otherwise I'll keep talking.
Yeah, I have a few questions. Let's talk about what it's not free, but what is a typical business valuation cost? What is the expense on that and the investment?
Yeah, we don't like to say expense. I'm
Right.
glad you corrected that. It's
Yep.
an investment. The the basic standard, let's look at your financials, let's dig in and ask you questions about, I talked about recasting and add backs before, and let's examine what similar businesses have sold for and what we think yours would sell for, starts at $950. We want to make that accessible. Um, we look at some other things that we don't have slides for today, but we use my Value Mountains framework. We use the 16 value boosters, which are things I've just noticed over the years that make one company sell quickly and have people fighting over it, and another one sit on the market forever. And it's funny because you can have two companies with the exact same financial records, the same revenue, the same profits, the same margins. One will sell at a crazy big multiple, and the other one just sits there. And these 16 boosters are the proprietary questions we ask to help figure that out beforehand.
Excellent. So, in addition to that, after you do this evaluation, I think what really separates you from competitors, in addition to your team, is the long-term approach. Right? You have plenty of runway. You're not going anywhere. You don't have to sell these deals. But I really like the idea that you guys roll up your sleeves, collaborate with these owners, offer services and consulting on a monthly basis. What would that look like if I'm not ready to sell? I still got a 2, 3, 4, 5 year window. I've created my valuation. I'm now a business owner looking to, kind of increase things. How does your team go in there and work on these types of companies to enhance their value long term on a monthly basis?
So structurally, if we have a client and we go through the assessment, we either take the let's sell soon or let's sell in the future. We come up with that together with you as part of delivering the assessment. If you're ready to sell soon, it's 60 to 90 days and we go start talking to buyers. If you're in the more of the we need some time to work on it, we'll actually go through these 16 value boosters. It's the framework we follow because I believe in it, to really just work on one project at a time. And what we found lately, what really helps some of these owners is while we're working on the exit strategy, we already know your business. So when you get that phone call from somebody saying, hey, I want to pay you this big multiple, or I'm from a private equity group, we want to put an offer on your business. All you got to do is call us. You're already in the family. You're already our client. You don't have to worry about, well, shoot, should I call that broker because he's going to want this big commission and he's going to try to not work with somebody that I brought to the table. That's bullshit. That's not how we roll. We have fee structures that we put together that contemplate for that scenario, because sometimes the best buyer is the one who flew into town and he's an exec at one of these other oil companies and is like, I need to buy a water business tomorrow. I'll be here for the week. We got to close by the end of the week. I'm going to wire you $27 million. And most owners are like, shit, I want that.
Yeah.
Like, yeah, please, but they don't know where to start. So when you're working with us, we've always got you ready for that. All you got to do is call. And then as we go through that process, when it's time, if we've got to go find other buyers, then we just go do it.
Yep. I love it. Two quick questions that came in. Chris, he's a chief lending officer in town, and so he deals with a lot of businesses that are getting ready for sale. He wants to know, when painting the financial picture for taxes, how much time do you need? Like, what's a good amount of a runway if things are changing in your business? In this example, he says last 3 years of tax returns show 500 grand NOI, but they added another building that will now increase production cash flow by 3x. Now they're going to triple their NOI. How much time will you guys need typically when businesses are changing on the fly? Or like we've seen this year, all of a sudden oil prices jumped up 30, $40, right? Things are changing. How much time do you need in an ideal world to get these businesses maximum value?
I can't give a good answer to that. And I was going to be a smart ass too of, well, it depends if you're dealing with bankers that have committees and underwriting, or you're dealing with a strategic buyer who says, oh, in this example, you've built this building. We need a building, so we're going to buy it. And their economics are based on things on the buyer side that they don't want you to know.
Right.
So part of the dance is working with advisors that understand this and say, look, I know you've only got your 500 in earnings, and when you're fully stabilized in this new building, it'll be 1.5. But you know that this buyer has another play in this market. They can sell their stuff to every one of your customers. They're going to see 3 million.
Yep.
They'll pay. Working through some of those is important, but I think the real question there is, how long do you need? I love it when we have a tax return that shows where we're saying we're going, rather than trying to play a game of projections. See, I don't like projections. I don't like drawing them up, writing them, making them, because I think it gets you in a whole lot of hot water. I'd like to tell the story and show the pieces so we can make it very, very simple for the buyer to do their projections.
Yep. So true. Great answer. And again, you and I will be sitting down with Chris, the chief lending officer, when you get to town. And he's
Did Chris just get a commercial on our webinar? That's awesome.
Yeah, exactly. So we'll be sitting down with him and talking about a couple of his specific clients that have needs right now. So last question.
We love that. Before you do that, like, I think sometimes brokers, and especially if you've worked with a bad one, get this reputation or this thing of they're not going to work together. My favorite thing to do is to put a deal team together. This is such an important transaction for so many owners, and I think it's so foolish to say, "Oh well, we're not gonna work with your consultant, or we're not gonna bring your banker in. We've got a bank." No. I want to sit down in the circle with all the people you trust and help get this decision right for you.
Yep. Well said. Well, good. We'll be having that strategic conversation next week. 2 questions. Mark wants to know, from your experience, is it better to sell when my business is at peak performance or when it's showing steady, predictable growth? Give us your answer on the crystal ball. And obviously it depends on what the future looks like, right? Especially now.
In a perfect world, you never sell at the very peak. You want to sell while there's still gas in the tank or capacity in the tank to put more gas in. If you have squeezed every drop out of your market and depleted everything you can do, and it's only going down, not a good scenario. But I think when the question you asked is peak performance, which I'll interpret as, I don't know, like fast, exponential, crazy growth versus slow and steady. Mm-hmm. I think in theory, slow and steady is good, but fast growth is great too. It's going to depend on the type of buyer. If we're going in looking for traditional financing or debt to buy a business, slow and steady and predictable is fantastic. But if you're trying to sell to a strategic acquirer, and you're down, and boom, if you can show at least 2 jumps, then rapid growth is great to me.
Yep, I agree. And what we've been seeing, Mark, is a lot of our companies have either been getting offers from other competitors or friends and people that they know, right? It's a small market, very tight knit. We're seeing a lot of those like, hey, I'm looking to buy this. Instead of trying to find new employees and try to buy equipment, a lot of these businesses that are sitting on cash have great, lending capability. They're just now bolting on other existing businesses that people are looking to exit and adding to what they have, either to get MSAs, get employees, get equipment, get real estate, and now just rolling up. So we're seeing a lot of current businesses on the market that are rolling up, but we also see a lot of investors, and specifically on the private equity side, that are looking to roll up 4, 5, 6 companies at a time, then pump some cash and money into them, get some efficiencies and economies of scale, and then let this rocket ship run for the next 3 to 5 years. And so a lot of times, each of those businesses are worth more when we do a roll up because we're able to charge more for them on a multiplier. And we're seeing a lot of that right now. So if that is any of you sitting on this call, I can actually see 3 of you right now that falls into that category. We really need to talk about setting up a meeting with all of you to figure out, would you guys, for more money, get a valuation and sell to a larger roll up? So great question.
I think there's some wisdom in that. It doesn't, people talk about the roll up which essentially means you buy many businesses at a smaller multiple. And then when you bolt them all together, you get a bigger multiple.
Yep.
I think it's very underrated and underexplored for people to do a friendly roll up, a friendly merger with people in town, especially when things are getting tough and you can consolidate and go kick ass to really make yourself attractive to that next tier up of buyer.
Yep.
But the problem is, who do you go to for that? Do you call your attorney? No, they're just going to tell you all the things wrong with it and all the risk and that you shouldn't do it. Do you call the broker? No, the broker's like, well, I didn't put that deal together. I don't even know how I get paid. No, you call us and we'll help you figure it out.
Sweet. Last question. Kate wanted to know, to follow up on Mark's, is there a best time of year or season to sell your business? And I would say a lot of that has to do with where you're at, the type of business. Are you in North Dakota? We see a little slowdown in the winter, but what's your best answer to that? And then we'll wrap up.
The answer is you don't sell your business in 30 days. So if you're going to play the seasonality, you really have to think about when you go to market, when you start entertaining offers, when you accept offers, and realizing that this dreaded due diligence process takes months.
Yep.
And that sometimes you get 60 days into due diligence and you realize that this ain't happening anymore. And then you start over. So my real answer is I try to not rely on seasonality or time of year. I try to rely on strategic windows based on the business. And it's something we do. We don't do a lot of it in the assessment phase. We talk about it, but if we uncover in the assessment that it's really important to your business, we just dive deep into that with building out your exit strategy trail map.
Yep. Excellent. Great question, Kate. All right. In summary, I wanted to let everybody know, we didn't have time at the beginning, that Ben was speaking about 4 months ago down in Cancun at this Legacy Navigator workshop that they were doing. He was a keynote speaker, and the room was filled with about 800 million of net worth of individuals, many of which have sold their businesses for well over 100 million. And seeing him up on stage and hearing, his process and his team, we then decided to join forces with him, partner up, because we're on the front lines. We're in North Dakota. We're meeting all these businesses, but we don't have the team and the legal experience and the ability to raise capital for buyers in a legal way and a approved way. So just a phenomenal relationship so far, and really looking forward to getting you up to North Dakota. Based on your calendar and the fact that you fly all over the country, it took us 4 months to get you to book here. So if you want to meet Ben, if you want to see what he has going on, the meeting is going to be next Thursday. It's at the Arc. We'll get you out a link with the invite. Sign up as soon as you can. We're going to cap it and limit it so that it's intimate. People will have time to ask questions. And then we got him to stay an extra day on Friday so that we can do one-on-one confidential meetings with you to talk about your business specifically, answer any questions that you have, and then just come up with a game plan to see what we could do to help you out. Are you a good fit? What's your timeline looking like? And then do we have resources, connections, and knowledge to help you level up your business in any capacity from a consulting standpoint? It's not going to be salesy. It'll be really low key. Should be a lot of fun, and can't wait to introduce you to that, or to Ben. Anything else you want to add as parting comments? It's your show.
Oh man, I'm excited to come up next week, and we'll keep coming out with other resources. So if you can't make it next week, sign up anyways. So you could wait. Are we charging for this one?
No, not on this one.
Oh,
we normally do, but this one we just wanted to get you up there, get everybody going there. We'll charge definitely more in the future, but we just thought it'd be low key, easy. Do it at the Arc. We don't need a fancy dinner like we had last time. It's just going to be no BS. Everybody get in a room, talk about what we could do to help them out today.
Well, thank you to our sponsors for making that happen. And I think what we can do, maybe we'll get a recording of it, or we'll do, I don't want to tease that content before I get up there and reward the people that show up, but we'll do a video version of it. And I want to provide all the tools I can. Again, we're on this million owner mission. I want to help 1 million owners understand exit, even if we never, ever, ever work together personally. Maybe if you're biased against bald plus size models like myself, whatever reasons, like I want you guys to be equipped to go fight this battle and achieve the exit that you deserve. So we'll see you next week. I'm excited, and I'll meet plenty of you too, I'm sure.
Yep. Can't wait. Thank you, everybody, for popping on. If you have any questions, let us know. And if you'd like to schedule a meeting, reach out to me via text or on one of the links that we'll send you. And everybody have a great day. Thanks so much.